Okay, good afternoon, good morning. So just a small refresh update about Euro USD and DXY. So concerning Euro USD, as we see here, it's a monthly chart using Fibonacci candle. And what is basically what I've been working on the last weeks, even months, is this long impulsive move, creating an ABC here. So ABC, you can see there. So we take this high, these lows, and this high here can be a little bit moved down, but doesn't change a lot the overall view. So we see that we just came perfectly to the peak on the 61.8 here, together with a double top of this M shape. This M shape, I call this shape and this move down here in 2021. I think it was in May or something like that, or I don't remember. It was probably in May. I said we are going down. So we have had this leg down, and now it is ending there for now. So we touched the 61.8 together with other very strong support resistances, FIB and everything. But this one is the major thing we have to look at. As I said, and that's very important to keep it even when we have some weird move or aggressive move on the market. What is important now is this double bottom and the end of this M shape. So after an impulsive move, or the move is dead, coming on the 61.8 of the ABC, that's the first option, or we look for the next 76.40 or 1-to-1 extension. And put them in percentage, it will be easier. Okay. Okay. So now 38.20, blah, blah, blah. So we stop at the 61.8, we can go to the 78.60 or the 1-to-1 extension. That would be, if we would break the 61.8, those one would be the place we would be looking at. So 0.97 something and 0.89. That's the target. But for now, according to what I say, we had here when we came here a very, very, very strong upside, very strong upside setup, looking really far away. So that's why we started to belong from there. Started to belong here. I've been adding long whenever we have been coming back there. So this setup usually is providing several thousand pips. It can be 4,000, 5,000 or more pips. So if you look here, for example, you can see we go way above those high here at 125, and I will show you how. So we must remember this red area here has to be holding. We could, of course, spike some pips under it, it doesn't change anything. But this thing has to be holding on a weekly close base at least. That's very important. As soon as we are holding this one, we are now looking at the other huge 20 years ABC, which is there. And this one, let me hide the first one now. So this one would be starting on this bottom. We came back mostly posted a double bottom here, a few pips away, but that's nothing on 20-year ABC. And in this case, the first target, even if it looks really far away from today, is the 61.8 at 151. That's very simple. So it's possible we don't go there in one time, and then we have on the way, each of those fields is a target we have, which will be a very strong target we have on the way. And you see how this 236 feet has been holding the price so well here, creating the second top of this M shape. and then we went down again to the bottom of this ABC. As soon as we keep that lows, if we keep them intact and we see an upside move from here, we have to keep this thing in mind because that is where we go. 121.83, 133.22, 151.65, and we can go ahead like this, but for now that's where we would stop. And you see how market is not random, never. You see that the 61.8 extension of this ABC with this bottom here, the 61.8 is right at the top of this move that was in 09. The bottom was about 10 years before we posted this bottom. So nothing is random in this market. And you see those low has been respected, and they are the 223.65 of this move, and that was many years before it happened. So all that is what I'm looking at now. You have those two things. The first one to say if we break, that's what we look, but I think we will not break now. And due to the fact that we are not breaking, as soon as we are not breaking, that's where we look at now. So if we come back to what happened on Dixie this week and last week, and with the consolidation we have. So the first thing I want to point out is these two areas here. It's a big, nice quarterly order block we have there. If you look at this fantastic order block here, so we have this one there. Then we go back to the Fibonacci candle, and if you look, you will be surprised how well they work. And you can see that on a daily basis, we stopped right to the peak on the bottom of the big quarterly order block. This is the big quarterly order block, the top and the bottom. That's where we stopped out together. Very important to point this out. Together with this broken trend line, we broke through this trend line after this move up, this big move up. We broke through. What happened usually, it's a very, very it's a move that we always see. You can see price going up in waves like this, like always. Then we start to break, and we will mostly, always, or often come back to the trend line that we have done. So then the price will come back and retest this trend line, and that's what we are doing now. We retest the trend line, and now we can unfold on the move down. Okay, so that's exactly what we are looking at now. We have been speaking about that in the mentoring room with some students, and you can see that a lot. So of course, I've been saying when we were looking at this area and this trend line, I said we can spike above. But if we look at it with regular candle on weekly base, which is I would say the biggest time frame we can use in a regular basis, but I use yearly, quarterly, and monthly. But you see that we never closed above. We spiked above up to this level, and we came back always under. Okay, so it's important to see that because it means we are consolidating. We have been consolidating here. We spiked above, we came back down. We could spike again a little bit higher, and we will use this trend line again with some other support resistances I have here, quarterly, monthly, blah, blah, blah. So we could very well do another move up. I think if we do this move up again, we did this one, we went through the trend line, we came back above, we touched the trend line again, and I don't know why it's doing that, and then we went down. We could very well, after this move, we could very well see another move. Sorry, we take this off, see another move up, retest some level here, and then finally collapse. That's what could happen. But if we look on a smaller time frame, what we had this week, always remembering what we had on the EURUSD that I just showed. The other thing you saw is Euro USD never broke the lows we had. We have had some lows on the Euro USD. Sorry, I'm looking at the date. We had the lows on the May 22nd. And if you look, May May 22nd is here. That's when we had the lows on the Euro USD, and we didn't post new lows. Meanwhile, DXY posted new highs, and that's a big divergence between Euro USD and DXY, and that tells us down we go here, up we go on the Euro USD. So concerning this consolidation, we have been looking at this consolidation for some time now. And let me take off this tip here. And what is important to see here, we can take off this one too. What is important, this is the consolidation. I said on Friday, we need to close above 106, 104.69 or something like this. And if you look the daily, you see that we closed right at 104.65, which is mostly where I will just put this, highlight this close here because it's important to look at it, because it's a daily and a weekly close, of course, because it was on Friday. So there's nothing big science there. But this low that we just show here is right the bottom area of this consolidation. So we spiked inside. I highlighted this level here, and I said we would stop in this area. That was where I was expecting a spike area. You can find it on Twitter. I posted that, and that's where we finally went. And then we went down again from here. And I think we will go on. But what is very interesting here is price action. So we have had this price action with this impulsive move down. Then we came back, making everybody think, okay, euro is dead, blah, 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 which is absolutely not true. And then we have been pumping here some momentum as euro USD did on this side to see the continuation of this potential move down. And that's what I wanted to show you. The other thing, some guys in the mentoring say that I should show you. So that's another thing I wanted to show you. You see where we stopped here, right on the 38.2 of this move. And what is this move? If you look here, so this move is the bottom of the consolidation to the top of consolidation, 38.2 to the peak. The other thing you can look at when you are looking for a place where you want to see where we stop or where we could stop and everything, you look at the big daily candle which is on the side. Generally, I prefer to do that with the body because that's where we have the volume, and that's something which is more interesting to look at. That said, we come back here. So what do we have here? It's very simple. Let's put an 18H candle, 4 hour. It's nicer. A, B, C. So as soon as we keep those high here, same thing as with the lows on the EURUSD. As soon as we keep those high here, this is the ABC. So we have that ABC down, which is actually under construction, I would say, if we can say that. So it's building, it's under construction. You see we are struggling on the 38.2 since the morning. We came back a little bit above, and that's exactly the same configuration on the EURUSD, where you're looking at this and you will see how nicely it's working now. So that's what we can use now to have some levels where we can expect when, for example, DXY will come in this area and will probably bounce from there to the 50% and then look lower. So that's what we are looking at, considering this nice consolidation we had here on the broken trend line retest, together with the Euro USD that is diverging from it. It's a complete thing we have to think and to look at, and that's why even if we go higher than that, just that ABC will be over, but the global image, which is the one I just showed you there, this one, yes, this one with the two fib, the trend, the big fibs we have been speaking about on the long term, on the long term chart, those big fib, and especially the red one is the one we are looking at for the long term. It goes up far away as soon as we keep this. So you see here, if you look even these lows here on 2016, you have this low on Euro USD, and you have this high. It's another, this low here on 2022. So 2016 to 2022, you will see. Let's look at this on the other thing. On the other side, we take 2016, 2022. Okay, 2016 is this one. Okay, 2022 is that one, so 16 is about in this area, so that's the same thing, January, blah, blah, blah. It's more or less the same thing. So if we look at those two tops here, you have, let me, where is 16? So this one here, this one is one, the other one is here. What do we have there? An upside move, okay? If we look here, we should have, if there was no divergence between DXY and Euro USD should be probably in this area, and it's not. It's even very divergent because it didn't post even a new lows. It posted the same high. So even on the very long term, 2016, 2022, we have a huge divergence with DXY that is posting really higher highs, not the case of the Euro USD.